Hey guys, we're going to talk about some basic loan terms, more specifically balloon payments in this video. So if you like it, take a minute and like us. Don't forget to subscribe to our YouTube channel. If you have any comments, take a moment and comment below also. So oftentimes investors are looking for ways to engage a buyer to pay off the loan earlier. And one of the things they do that with is a balloon payment. That simply means that after 1 year, 3 years, 5 years, 10 years, the entire amount of the loan comes due. So maybe you have a 30-year amortization on your payments, but you have a 5-year balloon, meaning that after 5 years, whatever the amount is on the amortization schedule is what the buyer now owes, and they're obligated to pay it off. Sometimes they can and sometimes they can't, and in those situations, if they can't do it, can you renew, extend, and modify the loan? Absolutely. Can you increase your interest rates to your borrower? Things of that nature along the way? Absolutely. Or you could take the house back through either a deed in lieu or a foreclosure if it comes to that. Every deal's a little bit different. Every scenario is different. Every seller and buyer are different. And so that's the fun part of our business, is to negotiate these things out as they come around. Now, if your goal is to get your deal cashed out, can you use a balloon vehicle, as we call it, in your mortgage to a buyer? The answer is yes, but you need to know whether or not you're under the Dodd-Frank Act or not. Dodd-Frank stipulates that if you do 5 or more transactions in a 12-month period, then you are typically under the Dodd-Frank scenarios, which prohibits balloon payments. So keep that in mind. And even though you may be exempt from Dodd-Frank, we still like to suggest you adhere to it as close as possible. It's just a smart thing to do. And think about this also. If you're a buyer, do you really want to buy a property with a balloon payment? If you've got suspect credit and you've tried to get a loan before and you think it might be an issue down the road, then will that buyer buy your house or not? The answer is they may not. So they may walk away. And the most important thing in our business is to get our properties income producing as quick as possible, but also with a goal that will allow us to accomplish what our goals are, which might be cashing that deal out. Maybe we've got short-term financing on our front end and we have to cash our loan out. I get all those kind of things. So knowing how to structure your front-end deal helps you structure your back-end deal to your buyer. Understanding what Dodd-Frank says and what you can and can't not do within the scope of Dodd-Frank is an important issue to follow. And then another option you can come up with is a deal that I use oftentimes called a step-up mortgage, meaning you start at a lower interest rate day one, and maybe every year, every 2 years, every 3 years, it goes up in interest rate. Maybe you start at an 8% interest rate today. In year 2, it goes to 9. In year 3, it goes to 10. In year 4, it goes to 11. Now, when you're processing that buyer, that is something that your loan processor has to know, because they have to process the buyer to the highest interest rate within the scope of the first 5 years. So knowing that, your buyer's got to be able to qualify for that highest interest rate in that first 5-year period. But at the same time, if your buyer reasonably cannot afford those higher payments, then it's going to put them in a position to sell the house or refinance, which is what ultimately accomplishes your goal of getting your loan paid off and putting cash in your pocket. But having a basic understanding of balloon payments, loan structuring that will help you accomplish your goal is a positive thing to look at. It helps you understand how to get to that end goal that you've got, but also how to work with your buyer and the marketability, because again, buyers get skittish with balloon payments, with adjustable rate mortgages and things of this nature. So always keep those things in mind. If you liked the video, take a minute, guys, and like us. Don't forget to comment below if you got any comments, as well as take a moment and subscribe to the YouTube channel. And if you're looking to learn more about the creative finance industry and the business and how to buy houses using creative finance, whether it's seller financing, subject to existing debt, or utilizing wraparound mortgages, and everything else all in between, check us out over at theownerfinancenetwork.com. We'll see you guys then.